that we're about to blast out of this range and not just have another nice leg up, but move into a price zone of new reality. I'm betting it's well over 100. It may be between 100 and 200. And I think a lot of that's going to occur in a handful of months, 5 to 6 months. We're waiting on one trigger. That's a spread relationship between gold and silver. And we run momentum studies of it as well. Now, everybody looks at the ratio, the 80, 70 to 1 type thing. We do it a different way. We divide silver to gold, express it as a percent. And right now, silver is about 1.2% of the price of an ounce of gold. That's extremely low going back 50 years. It's been over 2%. In 21 of the past 50 years, silver has reached 2% of the price of gold. And some of those weren't even bull market years. Okay, so we're very submerged, but there is a very clear structure on the spread charts. When you plot the spread chart, silver versus gold,
Silver's brief spike above $51 prompted headlines warning of a crash, but prices soon fell back, and gold recently soared through $4,000 an ounce. Michael Oliver, a market technician, claims that the collapse was a setup rather than a true crash, a well-planned shakeout designed to frighten investors away before the actual breakout happens. While gold, copper, and other metals have previously experienced higher revaluations, silver has been the most tightly controlled market in the commodities area for years, remaining in the $20 to $50 range. Oliver contends that this disparity can't continue for very long. According to his momentum study, silver is on the verge of a significant structural shift that, if resistance eventually gives way, may cause prices to soar. The next step won't be gradual, he says. It will be a swift and furious rally that traps short sellers and rewrites the history of silver prices by gapping higher. Be sure to like, subscribe, and hit the notification bell for more insights into gold, silver, and precious metals investing. Share your thoughts on the market in the comments below.
One of the fundamentals kick into gear, and suddenly you don't give these guys a chance to stop out of their short position. They put on at 50. You nail them to the wall and see if they can get out. Anyway, it wouldn't shock me that that's the way it happens. So I love seeing the selling at 50 because it tells me the idiots are still there. Yeah, well, in the futures, we watch the front month contract. Now, I know spot is above the front month contract. And it got to 51 and dropped back under 50 slightly. So it made new highs. Futures did not. They stopped at 49.76, a couple cents below $50. So some guy said, I'm going to sell the nearby future just below 50 and risk a nickel. Okay, make a dime. Okay, well, they're getting a sell-off here. Fine. Okay, I think it's idiot selling. Our assessment technically is that silver is about to make a quantum leap to a new reality. It's not in a bull trend. It's in a total shift phase in its price zone that it's lived in for 50 years. 50 highs, basically 20 is sort of a low, and it just lived there forever. Go to the Federal Reserve of St. Louis, Fred, and you can punch up charts like lead or zinc and go back in price history. And they'll have a monthly close-only chart going back to the 1990s anyway. And you'll see that they lived in a zone for quite a few, decade and a half or so, both those base metals. And in 2006, very late that year, silver and gold were already in a bull trend at that point. These metals took off and tripled in value, base metals. And since then, yeah, they've come back down, but they've never come back down into that prior zone of reality. They live in a new zone of reality that is double or more on average for the last 10, 15 years of what it used to be back in the 1990s to 2000. Well, silver's still in that first range, okay, where it was from the 1979-80 high, the 2011 high. Gold's above the 2011 high, copper's above the 2011 high, and silver's still contained here? Give me a break, okay. We know the fundamentals. I don't try to keep up with them too intimately because that's not what we do. But the technicals argue to us that we're about to blast out of this range and not just have another nice leg up, but move into a price zone of new reality. I'm betting it's well over 100. It may be between 100 and 200. And I think a lot of that's going to occur in a handful of months, 5 to 6 months. We're waiting on one trigger. That's a spread relationship between gold and silver. And we run momentum studies of it as well. Now, everybody looks at the ratio, the 80, 70 to 1 type thing. We do it a different way. We divide silver to gold, express it as a percent. And right now, silver is about 1.2% of the price of an ounce of gold. That's extremely low going back 50 years. It's been over 2%. In 21 of the past 50 years, silver has reached 2% of the price of gold. And some of those weren't even bull market years. Okay, so we're very submerged, but there is a very clear structure on the spread charts. When you plot the spread chart, silver versus gold, there is a pending triple top breakout at 1.31%. So we're not far below there. When we cross that level, the same thing happened to its spread versus gold in 1979 and in the fall of 2010, just before silver went totally vertical. It went from like 20-something bucks to 50. Boom. All in a handful of months. The spread was the tell. And we're watching that. We think it's going to break through. And our momentum of the spread suggested even a lower level than that 1.31%, which is a prior double top. We'll break out before that. And when we do, when that spread breaks out, I'm putting the seatbelt on. I think silver is the place to be for the next 2 quarters. And the move could be enormous. And you look back and say, oh, now I understand why. Supply demand's been tight, et cetera, et cetera. Market has been an irrational level for too long compared to other metals, for example, that have done the same thing, had a tantrum and moved to a new reality. Anyway, that's my major comment.
In the world of precious metals, Michael Oliver has established himself as one of the most reputable and disciplined technical analysts, and his predictions aren't based on conjecture. Momentum spread analysis, a special technique that gauges how silver performs in comparison to gold, is the source of his optimism. The conventional 70-to-1, 80-to-1, and so forth gold to silver ratios are the main focus of most experts. Oliver, though, changes that. Rather, he monitors silver as a proportion of the price of gold. That percentage is at 1%, which is among the lowest in the past 50 years. It has historically hovered around 2% on average, although during significant bull markets, it has soared above 3%, reaching 6% during silver's historic run in 1980. Make sure to like, subscribe, and click the bell icon to get notified whenever we upload new content. We really appreciate your support.
Yeah, that reality's been there for a while. We know that. Recent years where the supply demand is the way it is and demand increasing, supply is not, et cetera. And yet price hasn't responded in a real way. I mean, you think about dollar terms also. 1980, 50 bucks. In real dollar terms, where would it put us now? It's probably 250, okay? In the decay in the value of the U.S. dollar, not relative to other currencies, but in real buying power. Even over since 2011, money supplies increased like 150%. Okay, has silver increased that much above the 2011 high? No. Okay, so there's all kinds of realities out there that we know exist. We scratch our heads and say, this is ridiculous. Okay, we do anyway. And we know when it changes, it could change in a way that is, well, we've seen it in many markets. We've been around long enough to see when a market gets overvalued for too long, it gets ridiculous. In hindsight, everybody calls it a bubble. Of course, when it was happening, nobody called it a bubble. Or a market gets suppressed for so long that people think, oh, that's a new reality. It's a piece of crap. We don't, who cares about silver anymore? And it suddenly says, I'm going to wake up. Markets make mistakes. Investors make mistakes in terms of allocation, proper pricing in relation to reality. These things happen. Markets aren't always rational. And I'm arguing that silver was irrational, especially for the last 10, 20 years. Of not ever coming up above this base range high that virtually every metal in the world has done. And not silver? Oh, okay. What for? And now it's moving with gold now because it's a monetary metal. But when silver engages on the fundamentals, like the graph we just saw, it'll have its own life. And I think it's going to move to a new reality. And again, if you do a dollar conversion, $200 is not irrational whatsoever. And sometimes when markets are too irrational one way, when they correct the other way, they overcorrect. Okay, you go way beyond what the new reality might be in silver. Maybe silver's going to live in $100 to $200 range for the next 10, 20 years. But it might reach 200 and pull back to 150. You'd get my point. And there's a new reality. The technicals are arguing for that, especially the long-term momentum technicals and the spread relationship to gold. Argues that silver, just to go back to its normal reality, let's say 2% of the price of an ounce of gold, which it's been 21 of the last 50 years You've seen it at that level. In bull markets, silver spread to gold goes above 3%. In 1980, it went to 6.5%, the price of gold. But let's say it just goes to 2%. Well, what's 2% of $4,000 gold? Okay, what if gold goes, and we've been arguing this, and does what it did twice before? It had bull markets in the last 50 years, both of which were 8-fold gains, bear low to bull high, under circumstances that are far less dramatic and earth-shaking than what we have building out there now. If gold did it again a third time, had another 8-fold move, we'd be 8,500. Well, what's 2% of that? Okay, you get my point.
Michael Oliver makes a compelling argument in his concluding remarks on how skewed the silver market has become and why it cannot continue indefinitely. He clarifies that markets frequently make errors. Investors enable illogical patterns to continue for years, misprice assets, and misinterpret value. He believes that throughout the past 20 years, silver has had one of the most illogical prices of any asset. Silver has stayed stuck in its previous price ranges, failing to reflect its true value, while almost every other metal, from copper to gold, has broken out. Oliver, though, thinks things will soon change. He claims that because gold and silver are both monetary metals and not merely commodities, they are finally beginning to move in unison. However, he anticipates that silver will wake up and discover a new reality once its fundamentals take control due to industrial demand, supply constraints, and the decline of fiat confidence. According to his reasoning, a price of between $100 and $200 per ounce for silver is reasonable, even prudent, and neither speculative nor outrageous. His analysis of momentum and spread supports this view. Silver's price has historically hovered around 2% of gold, although during bull markets, it has risen above 3%. It even hit 6% in 1980. Even 2% of that would put silver at about $170 per ounce if gold rises to $4,000 or even higher to $8,050, which Oliver claims is feasible given previous 8-fold bull runs. That's the math for what he refers to as the new reality that silver is bringing. Thanks for watching. Be sure to like, subscribe, and ring the bell for the latest gold and silver updates.